Good
Good
morning,
morning.
Paul. How's it going?
I'm good. How are you? How was your weekend?
It was great. How about you?
Oh, it was awesome. Weather warmed up, the smoke is gone, and it's beautiful as ever. First day of fall.
Nice. Yeah, that's good to hear. Let's see.
Yeah.
This one, a little bit of volume. Okay. So, hope everybody had a great weekend. Thanks for joining today. We're going to go over a few things today. One is we have our loan trainer on our tried and true home loans side, and he has a little bit of information about um, boot camps that are coming up. If you're looking to obtain your NMLS license to originate home loans, um, it's a great addition to your business. We have some refi potential coming up. We're already entering that market now with the rates dropping down, and more clients over the past couple years are now reaching out for refinance. And so it's a pretty good time to look into getting your NMLS license to originate loans, because maybe you have a lot of past clients or just friends and family that you're talking to that are looking to refinance, either get cash out or, just improve their rate. And so it's a great source of, additional business. So Paul's going to talk to you about that, what that looks like. And before we start with that, I do want to share one other thing. So today, if you can see my screen, hopefully you see Jeff Lobb up on the screen. So he has a session coming up basically after us. Let me just make sure that you can see that. Um, I posted it in the Facebook group, but if you didn't see it, Jeff Lobb after this so he's on Eastern, it'd be 11 o'clock. He's doing the power of data today. This is a free session for all the Coach 52 users. If you are a Rise Realty agent, you have a free Coach 52 account. So if you don't have an account, let us know real quick after this meeting. We can get you set up. It's free, but that's where you can watch this 1 hour session. I believe they're usually about a 1.5 hour session that he does live once a month for all the Coach 52 users. So this will probably be a good session today if you want to jump in and just listen to what he has to say about data and using it for market, daily activities, and leveraging your client base. So with that, I say we go ahead and roll into Paul. Good morning.
Good morning. Thank you very much. I am going to share my screen. Give me just 1 second. Let me.
All right. And I saw you request that, Carmi, so I'll ask Roxanne to set you up an account.
Okay, here we go. Okay, can everybody see my screen? Can you see it?
I can see your screen. Yep.
Okay, guys and gal, welcome. My name is Paul DeMambro. I live up here in Big Bear Lake. The picture behind me is definitely the other side of Big Bear that was taken, I believe, on Friday. By not me, but by a photographer, a really nice guy up here who takes lots of photos and travels around the world. I've had my real estate license since 1999, and I've been doing mortgages since the early 2000s. And then when NMLS came out, I was one of the first people who got the NMLS license in 2010. A lot of us had no clue what the license was specifically for, since there was a lot of changes due to new regulation. So, excuse me, I'm having a little bit of anxiety right now, only because we had a ton of smoke a couple of weeks ago, but I'm calming now. So forgive me as we get through. UWM, United Wholesale Mortgage Company, is one of our mortgage partners, and they're having a what's called a Mortgage Broker X training for real estate agents like you guys and gals that don't have a mortgage license, that are interested and serious about getting the mortgage license. I'm going to start it, and I am going to explain how it works. Okay, Broker X offers a 5-week course designed to transition individuals from unlicensed to licensed mortgage loan originators, MLOs, supporting their entry into the wholesale mortgage lending industry. So in other words, you're going to have, once you get your license, you work for us, you're going to have access to 30 different lenders. You're going to get a feel, is your client shopping interest rates, or is your clients have a bad, or I'm going to call it unique credit, that need help, or maybe they need to go self-employed type of loans, bank statement, no income, things like that. The program is aimed at fostering career growth and expanding market share for mortgage brokers. Includes comprehensive virtual training approved by the NMLS system. Okay, so loan officers who work directly, like Caliber or Chase, Wells Fargo, Bank of America, they only pull one credit. They only have access to their own product. They have overlays. So in other words, if Fannie Mae says, hey, our minimum is 620 score, these lending institutions that are direct, the majority of them will say, yeah, hold on, we're only going to take 700 FICO. So that kind of makes that makes your job harder. But being a self-employed originator through the DRE, you will definitely have a lot of choices. Okay, participant undergoes 4 weeks of licensing preparation and prep with on-course learning, followed by a final week of on-site experience at UWM, the nation's top mortgage lender. This path offers significant career opportunities, including flexibility and potential long-term success in helping borrowers secure homeownership. Okay, UWM has a lot of program training. They want to help you succeed. In fact, I go there once a year. They pay for it. They fly me to Michigan. They pay for my hotel and my food. And UWM is a very big lender. It's like their hub, their headquarters over there. I'm overdue. I'm hoping to go next couple of months, if not by next spring. So I'm going to try not to get ahead, but take a step back. So what to expect? Okay, orientation. This is week 0, not week 1, week 0. You're going to review the program requirement, ensure your eligibility to participate, register to take the secure and fair enforcement or the state MLO exam. Once you pass this exam, you're licensed NMLS. Okay. And this is through Zoom, virtual. Week 1 and 2, you're going to build a foundation. It's virtual, instructor-led. They're going to help you prepare for the test, which count towards 20 hours required for the NMLS. NMLS approved webinar, small group discussions, and tutoring. Now, this is stuff that I didn't get when I had to get the NMLS license back in 2010. This is all inclusive, so you're not going to be by yourself. They're actually going to help you. They're going to teach you. They're going to tutor you. They're going to make sure you understand. They're, in fact, probably most likely going to ask you some test questions, which I found in 2010. One of them was, what is DU? Most of you don't know what that is. You might heard it from, hey, are you submitting an offer? Do you need a copy of the DU? You might have heard it through that. Later, once you pass your exam, you're going to understand why you don't need that for your offer. That means nothing. So anyway, DU stands for desktop underwriting through Fannie Mae. That's one question you should know. Okay, week 3 to 4, study and take the test. Virtual and self-paced. This is where you go virtual and this is more self-paced for you. Review the materials from week 1 and 2. You take the practice test. You take once you're ready to take the test, proctored, supervised test. So if you're in Redmond, San Diego, Los Angeles, or if you're in Texas, in Dallas, Houston, you take the test in a proctored location. Like I said, it's in person during scheduled time. You obtain your test result and you share your verification with on-course learning. Week 5. a 3-day in-person success track class at United Wholesale Mortgage. Every time I go, this company really motivates me. Like I said, I've been doing this for over 25 years. They keep you on top of your toes. Success track, I've been several times, even though I'm not new. It's just lots of new information. Role playing, mock phone calls, and networking with loan originators from across the country. So think about it. You're going to meet other realtors and lenders from across the country, and you can actually refer them deals as well. On the real estate side, yes. The NMLS, they're still trying to tweak to make that work, but for right now, our company only does California and Texas. So you can get, once you pass your NMLS exam, we do California and Texas right now, just focus in California, then later get Texas once you get your feet wet. Okay, this is an example of what the schedule looks like once you enroll into the program. Weeks 1 and 2. Now, if you notice the times, Monday, Tuesday, Wednesday, Thursday, Friday, you'll see 10 a.m. to 4 p.m. That's Eastern time. So what is this? You got to get up early, 7 o'clock in the morning, and get on your webinar and boot camp. Guys and gals, if you're motivated to do that, just do it. If you're thinking, I really don't want to get up that early, maybe it's not the right time. Maybe you can catch it in January, February, no problem, because of the holidays are coming around. But truly, guys and gals, guys, this is very serious. If you are super serious about this, I highly recommend you jump on it, okay? Because this is going to be super fast and you're going to be following instructions and rules. You just got to jump in it. Yes, you are, with our company, you will continue to be self-employed, 1099. You won't be a W-2. So in your mindset, when you're doing real estate, you're self-employed, you do what you want to do, you do everything how you have it set up. Broker X for the next 5 weeks, you got to set your mindset, follow the schedule. If you do everything, all the right steps, you'll be fine. Now, here's the catch. Here are guidelines. This is where I'm going. According to the guidelines set by On-Course Learning and NMLS. Okay, NMLS is very strict. You got to attend all classes. Being late by more than 10 minutes or using a cell phone during your virtual class will result in losing eligibility for the program. Meaning NMLS is going to say you're ineligible. Okay. A 10-minute grace period is allowed for late attendance. Hey, that's one time. I mean, just don't be late at all. For the duration of each virtual class, participants are required to keep their cameras on and must log in using a desktop or laptop computer. Testing and licensing requirement. You are responsible for obtaining and sharing your SAFE MLO test results with On-Course Learning, and more information on this will be provided during orientation and the first 2 weeks, week 0, then week 1 and 2. Attendance at Broker X require all participants to register and pass the SAFE MLO test. Failing the SAFE MLO test results in a mandatory 30-day waiting period before you can retest. This is across the board. So if you fail it, you got to wait 30 days. And then you can retake it. You will lose the chance to attend the on-site skills development, which is success track training at UWM in Michigan for that Broker X session. So in other words, you fail your first test, week 5, you can't go to Michigan because you have to have your license already passed. So what's going to happen is instead of you going to Michigan, you're going to spend the next 30 days trying to retake your test and pass it. So you can go to Michigan and get your feet wet, get on board, and move forward. Don't feel bad if you don't pass your first time. I'm going to share you something, okay? It's personal, but I'm ready to share it. When I took my real estate exam back in 1999, that thing was so darn hard. It took me, I think, twice or maybe 3 times to take it. But I was so determined to pass it, and I passed it. Now, I was then told that in 2010, the NMLS, they were going to make it super hard for everybody, and that was not true. I passed it from the first time only because I was experienced. I knew the terminology, Now, keep in mind, when you go to these classes, the Broker X, they're going to be teaching you a lot of things. And since you already have your real estate license, you're going to kind of understand, if you've been closing transactions, even if you close one or two or three with a lender, you're going to somewhat understand how everything works in the back end, terminology, and things like that. Okay. What does Broker X program cost? We're not tried and true. To Travis, we're not charging. We don't charge for the Broker X, the 250. The Broker X for 250 is an exclusive rate payment, which is due full to our partner on-course learning within 24 hours submitting the enrollment form. This is going through on-course. You're paying them the 250. The UWM not charging you for Success Track. Like I said, they're going to pay for your plane ticket, your hotel, and they're definitely going to feed you. As part of Broker X on-site skills development, Success Track at UWM is included at no cost to you. Once proof of participant passing their state MLO test is received, in other words, you prove that you passed the test, but maybe you don't have your license yet. It might take a week or two to finalize that. Travel arrangement will be confirmed by UWM. Participant must also cover their safe MLO test registration fee. Okay. $250, you pay on course, you go through the boot camp. Once you register for your safe MLO test, the fee to NMLS charge over $110. Now, I don't remember what all the fees are. I meant to look at it over the weekend, but I will tell you, they'll charge you, I think it's like $30 for the credit report. They might charge you either $12 or $20 for a background check. There's another fee. I don't remember what that was. But I do know, I don't remember how much I paid in 2010, but I do know it seems that I've been paying $330 a year for my renewal fee. I think I paid very similar amount to when I initially paid, plus the background check and so forth. And the cost necessary for background credit check, like I mentioned, detail further for the there's more details for during the orientation. Okay, now let me just kind of go through the frequently asked questions real quick. So, how long is the Broker X program, and am I required to attend every class? Okay, Broker X program lasts 5 weeks with a mandatory 1-hour virtual orientation held the week before, which is week 0. Attendance at every class is required. Week 1 and 2 feature instructor-led virtual coursework. Put yourself in a room, focus, don't have any distractions behind you. Week 3 and 4 are for self-paced exam preparation. This is where you're going to practice for the exam. Week 5 involves the on-site training at United Wholesale Mortgage headquarters in Pontiac, Michigan. How will I know the results of my safe MLO test, and what should I do with them? You will be responsible for obtaining your safe MLO test results and sharing verification with on-course learning. Further details on this process will be provided during orientation and in week 1 and 2 of the program. All right. When will I receive details about week 5 on-site skill development success track training at UWM? After attending orientation and completing week 1, you'll receive an email in week 2 with more information and a link to submit any personal details that UWM needs to arrange your travel. Please note, on-site skill development is part of Broker X and comes at no additional cost to you. How will I know the results of my safe MLO test, and what should I do with them? You will be responsible for obtaining your safe MLO test results and sharing verification with on-course learning. Further details on this process will be again provided orientation in week 1 or 2 of the program. Okay, so once you pass everything, once you come back from UWM, hopefully from the first time you pass your first test, the first time, but don't feel bad if you have to take it twice. You come back, you sign up, doing your loans with Travis and I. And what's going to happen is once you come to our program, I will be walking with you. You're the mentee, I'm the mentor. You're not going to be out there by yourself. There's no point to be scared about it. Now, I will give you two different feedbacks. Okay, I'm going to be right up front with you. There's this gal who had many, many years of experience in doing real estate. All right. She's smart. She when she got her NMLS license, she came on board with us, and as she knew all the terminology, she kind of knew what lenders do. When she became her own loan officer, everything just came into place because she had years of experience. On the flip side, she got really scared. She's like, oh my gosh. Initially, she said, this is a lot of work. And I said, well, you know what? This might sound a lot of work, but it depends on your client. And once you get through a few loans, you get it, everything moves really fast, and you're not going to even think twice. Now, since the market, depending what location you're at, the market's slower than the last few years, this is a good time to actually, if you truly want to do it, if you're truly more than 110% serious, sign up for it. Go through the program, get your license. Next year's a better year, and go through it. Now, if you need any support, question, this is my contact information. I guess I'll turn, if there's no other questions, I'll turn it back over to Travis if there's any rising questions. Travis?
All right, so I'll put this up here. So yes, what's the difference between this boot camp and just, doing an online course? Because you could go to on-course learning and get, the education package that you need, just all the same, and you can do it self-paced the entire time. For the most part, they are somewhat proctored because they're required to by NMLS. The thing that I do like about this is you're going to get exposed to UWM at the end by being able to go to their facility. And like I said, or like Paul said, they fly you out, they put you up in a hotel. It's a huge campus, and it's a really high energy environment out there. You meet your underwriting team you're going to be working with, you meet your account executive, and this is just one of the lenders that we work with. This is kind of like our main lender that we broker loans to, and they're the biggest wholesale lender in the nation. Really just positive way to kick off your loan business. So if you have been thinking about it, I encourage it. I think it's a really good, it's a license that complements your current real estate license. The test is very similar, in my opinion, to the real estate test. I passed it first time. I think most people that I've talked to have passed it first time. It's not too bad. It's very similar to the whole getting licensed in real estate process. So if that wasn't too bad for you, then this is, it's not going to be that difficult. So we just thought that we would throw this out there. This is something new that UWM is doing, and it is booking up. The cost is about the same as if you were to go to on-course learning or any of the other more, NMLS licensing, educators out there. They're all about the same, and the cost is very similar to obtaining your real estate license. So if you're interested, if you have more questions, go ahead and reach out to Paul or me, and we can get you signed up with UWM on whenever their next opening is for the boot camp. So
I'd like to add a couple more things. So guys and gals, I need at least 5 people. I need 5 people this week to reach out to me. They're very serious about it. We would definitely want to get started. Now, Broker X, they're going to be running it either every month or every other month. I know the holidays are coming up. So if you're very serious, just reach out to one of us. And then last but not least, oh shoot, what was it? The other plus about doing it through Broker X, that you're going to be networking virtually and at UWM. So you're gonna gain more information, more knowledge versus you trying to do it yourself, self-paced, and just doing it by yourself. You're gonna better understand more stuff. The more the better, and they're going to help you pass the test from the first get-go. So thank you very much, everybody, for your time.
All right, cool. Sounds good. Okay, so we'll go ahead and roll into mastering a request for repairs. And I wanted to do this today because they have made some slight updates with forms. The last time I did a similar webinar like this, and just want to clear up some, common questions and misconceptions I get, as a broker, and you guys are calling for support and things like that. So I wanted to go through some of the processes and the FAQs on requests for repairs. So this is kind of, I'd say this is the number one question that I answer. Because there are misconceptions, and our clients have a lot of misconceptions, depending on what area of the country they came from, or they're hearing things from their uncle and their aunt and things like that, who haven't bought a home in a very long time. Is there an obligation from the seller to make repairs? And there is not. There is absolutely nowhere in the RPA whatsoever that obligates a seller to make repairs, whether it's health and safety, permits, or anything else like that. The only thing that is required for them to repair is what is agreed to in the RPA. And generally, that is going to be the smoke detectors, the CO monitors, and the water heater strapping, because those are check boxes in our RPA. And usually we're checkboxing those. Beyond that, there is no other obligation. So when you're talking to your clients and they're assuming, or maybe you have been assuming, that the seller is obligated to correct health and safety issues that come up on a home inspection and things like that, they actually have no requirement whatsoever, no obligation. So I do want to look at example number 2 here, which is the retrofit requirements. Some areas of California, up north, you've got sewer lateral systems. That's a point of sale requirement. City of LA has point of sale requirements for zoning and permitting. There's other little various areas that have ordinances where they do require a point of sale correction to be made should the property be failing that city inspection. Those are in the RPA as well, the Q5, Q6, that on the grid section, that sometimes we get questions like, what is this? Why, and usually I see listing agents counter that out. We're not gonna be responsible for Q5, Q6, because a lot of times they just don't even know. So, so if you don't have it in the RPA as something for the seller to correct, and it's agreed to upfront, there is no obligation of the seller. So, and you can look here, this is a snippet of the RPA itself, section 7B. Property shall be delivered as is present physical condition as of the date of acceptance. And then 2, property including pool, landscaping, yada, 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 to be maintained in substantially same condition. Number 3 right here, except as specified in paragraph 9C, seller is not responsible to repair any holes left, removal of any wall hangings, so on and so forth. So it kind of goes on as far as the condition of the property, but you can see right here, there is already an as-is clause in the RPA. So when someone counters you back and they're like, this property is sold as is, they're just stating something that is already in the RPA. If you're stating that that the seller will not make any repairs or credit requests, then you need to write that specifically into the RPA or counter offer, because that's technically what is meant when you get a counter offer back and it says, we're selling it as is. The RPA already says this. Paragraph 7 also requires the seller to maintain the property in substantially the same condition. I just went over that. 7B number 2 right here. So when you look at it and make the offer, that's how the property is to be delivered for the most part over to your buyer. If it looks worse, then we have items that we need to maybe note on our VP, our verification of property condition at the end. Practice tips. Even though the seller is not obligated to repair pre-existing defects, the seller is required to disclose to the buyer any such defects of which the seller is actually aware. So repairs required under state and local law. State law requires that upon sale of certain properties, water heater, deep array, smoke alarms, and etc., the buyer and seller cannot contract around that legal requirement. So that's why that is a checkbox in the RPA, because those are requirements. Someone needs to do it, buyer or seller. But above and beyond that, like I said, there is no obligation for the seller to do anything. So doesn't the seller have an obligation to make repairs for dangerous conditions, violations of health, safety laws, etc.? And that is a no. The existence of a dangerous condition or violation of health and safety law does not create a point of sale repair requirement, unless it's stemming from one of those city inspections, the point of sale inspections. Paragraph 7 specifically states the property improvements may not be built according to code in compliance with current law and have had permit issues. So we're still in the 7B section, and right down here in the bold, if you ever want to point this out to your buyer as you're explaining this contract as you go, the buyer is strongly advised to conduct investigations of the entire property in order to determine its present condition. Seller and agents may not be aware of all defects affecting the property or other factors that the buyer considers important. Property improvements may not be built according to code, in compliance with current law, and have had required permits issued or finalized. So can you sell the home without a permit and all these other things? You 100% can. The buyer is taking on that responsibility should that become a problem later on. But, you know, as we're dealing with a request for repairs right here, this is not something that the seller must take care of. They can sell the property without having proper permits in place and things like that. Such problems of which the seller or agent are aware still must be disclosed of, because those would be material facts, and you need to disclose those still. So just because they don't have to fix it doesn't mean they don't have to disclose it. Practice tip in a transaction involving VA or FHA loan. This is another big one that comes up quite a bit. Repair of habitability conditions by seller may be a buyer lender's requirement. In this situation, it's best to get a commitment from the seller that they will make such repairs up front, although most will not agree in a seller's market. This can be added in G2 of the RPA. So, another misconception. Buyer has FHA or VA loan, and the appraiser goes out there, they do their appraisal inspection, and they add on some appraisal conditions. The appraisal conditions usually stem from habitability issues. You're looking at peeling paint, you're looking at loose wobbly toilets, maybe a stove burner that doesn't work, any moisture issues that they can note, things like that is what I see generally get noted. And just because the seller is accepting a buyer with this type of financing does not mean that they're agreeing to make the repairs, if any, conditioned by the appraiser. So you have to keep that in mind as well. So when you're making your offers, if you want to make sure that the seller is agreeing up front to make any such repairs, should they come back, you'll probably want to throw that down in G2, something kind of simple, such as seller agrees, I spelled agrees wrong, to complete all lender required repairs at no cost to the buyer. So at that point, should there be some conditions that come up from appraisal conditions come up from the appraisal, that's a lender required repair due to the financing, type of financing, FHA, VA, you're binding the seller to make those repairs. So this can be a tough one sometimes to negotiate, especially if it is a hot market or the home has multiple offers. But that, other than that, that's really the only way you can bind them up front. Otherwise, they have no obligation. So you're going through the process, you get to the appraisal, they condition some items, you pull up your request for repairs, you're asking for those items to be fixed. Now the seller doesn't want to. What do? You know, so you're putting yourself in kind of a tricky situation sometimes if you don't have a commitment up front from the seller. If the sellers decline to agree to this additional provision, the buyer would need to make the request during the investigations period, as stated in 3E1 of the RPA, using C.A.R form, RR, the request for repairs form. The default timeline in the RPA is 17 days, and you can see that right here. E1, if you're doing FHA loan, it's stating that within 17 days, you will make that request on the request for repairs for any lender required conditions. All right, so you have to keep in mind, this is still a request. That's why this is called a request for repairs. And the seller does not have obligation unless agreed up front to make those repairs. So let's go over some flow, explanation of how the form is supposed to work based on the current revision, which is 1223. Page 1 is the buyer's request. The buyer would use the form RR, to propose that the seller take one or more of the following actions. Either make the repairs that they're stating, cure section 1 and or section 2 conditions as verified in the wood pest report, provide a credit, or adjust the price. And it could be 1, 2, 3, 4, or any mixture of these. This is the request from the buyer. So maybe they want a couple things fixed and a credit, and then also section 1 done on the wood pest. So they would check this box here. They're going to check that they want the section 1 completed, and you put in the report date from the wood pest inspection, as well as who prepared the report. And then maybe they want a credit as well, so you would also check box 3 and type in your credit. So that's how you would do that in that situation. If they're only asking for repairs, you're going to check box A, and you're going to line out, you know, what items the buyer wants requested, and you may need to use an additional addendum or something like that if there's a long list of them. When you're doing that, I probably should have thrown an example in here. I reference the home inspection and or whatever report I'm referencing on that. So I might say summary section 2.3, by seller to correct, plumbing noted. So I'm going to reference it back. So there's no question as to what I'm talking about. And then you always attach your inspection report anyways with your request for repair. So then listing agent could go, okay, they're referring to this exact line right here on the summary report. I know what they're talking about. There's pictures included, so on and so forth. So that's how I do it. Next up, the buyer may attach the inspections, which you're definitely going to want to do. In the case of FHA, VA, lender required repairs, buyer can request that the seller make required repairs. Down in section 3 here, this is the RR form still. Section 3 is for the FHA, VA lender required repairs. So you might have multiple sections being checkboxed here where you say, okay, I want a few items from the home inspection done. I definitely want to get to section 1 taken care of. I'm going to ask for a credit for a couple things because I don't think they're going to get done in time before close of escrow. And then I also want them to take care of these FHA items. So you're checkboxing quite a few things and filling out quite a few things on this repair request form. Page 2 of the RR is the seller response. So this is where the seller is going to say, okay, we see what you're asking for, and this is how we're going to respond. Seller may respond in one of 4 ways to the buyer's above request by checking the appropriate boxes. In this section, the seller can agree to all of the buyer requests, which is just going to be 1A right here. They'll check the box for all. Seller agrees to all buyer requests, or a partial amount of the buyer's requests, in which case they'll check right here. Partial, sort of saying, I agree to some of that stuff, but not everything. So they'll say, they'll check partial, they'll check number 1. Seller agrees to all of buyer's requests except maybe a couple things in here. Or maybe they want to reduce the credit or offer more of a credit because they don't want to do some of this stuff. So you can kind of make some adjustments right here and then basically send that back over to the buyer. The other option is number 2. You can just check this and say seller responds to the buyer's request on the attached 4R, which is the seller response to the buyer's request. So that's a completely new form, and that would be RRRR1. We'll touch on that a little bit further down. Or maybe the seller doesn't agree to anything. They just check this box here. We don't agree to anything. They sign it, send it back. They can also just not respond. There is no obligation, remember, for the seller to respond whatsoever. That doesn't mean that contingencies are getting extended or anything else. That just means the seller's not responding and the buyer is still obligated per the terms of the RPA to perform. So let's say that they don't agree to any of the buyer's requests. The buyer now needs to make the decision. Well, they're not gonna fix anything in the house. They're not gonna give us any credit. They're not gonna take care of the lender required repairs. Do we still want to buy this house? And if they don't, because all that is just too much for them to wrap their head around, then they initiate a cancellation at that point. Or they can continue to move on and, you know, they're bearing the cost and everything else of all of those items that they requested, and they need to be okay with that. Let's see, from the listing, for risk management and everything else, even instead of the seller, if you're on the listing side, instead of the seller not responding at all, it's a good practice just to check box 4 here and send that back, just to kind of keep the deal maybe on track. Professionally, I think it's a little better to do that rather than no response. If the seller is either rejecting the request in its entirety or countering with their own proposal using form 4R, the seller may skip section 1 of the RR. Page 2 continued, so we're still on page 2 of the RR, down at the very, very bottom now. So we had page 1, buyer request, top middle section of page 2 of the RR is the seller response. And down at the very bottom, if there was a modification, so the seller said, you know what, we're going to do a partial here and adjust the credit a little bit and send it back, then the buyer can now check that they accept the partial condition or they do not accept the seller's partial agreement. They're going to withdraw this request for repair number 1 and make a new request in the attached request for repair, which would be labeled number 2. So basically you're starting over. So, and then they'll sign that. This section is only relevant if the seller chooses to respond on form RR instead of the 4R. Because the seller agreement in that section is conditional, buyer must now agree to those 3 conditions by signing this section. Now we'll talk about the 4R. The seller may choose to continue repair request negotiation by using form the 4R. In the matter, if the matter could not be sufficiently addressed using the original request for repairs form. So page 1 is the seller's response to the buyer's request. In paragraph 1 of this section, the seller states which repairs, credits, or price adjustments the seller will or will not agree to make. Any combination may be made by the seller. Any overflow text should automatically appear in the text overflow addendum, which usually happens, a little confusing sometimes. So we're right here on page 1, seller response to the buyer request. Seller only agrees to the following. Check the box to all the buyer's requests and repair number 1, except, and they would write down the exceptions that they're agreeing to. Maybe they just want to do a full credit. So they can check box 1B, say, hey, instead of all those repairs requests and everything else that you're doing, I just want to give you $5,000 credit. So then you'll just type in $5,000 there. They could choose to modify the price or anything in between, essentially. In paragraph 2, the seller can ask the buyer to remove specific contingencies as a condition to agreeing to the buyer's requests. The seller also requests the buyer to release the seller from liability regarding disclosed conditions of the property. So that's why I do like, to have these as a paper trail, because not only is it showing that the buyer made requests, the seller was rejected or did partials, they came to an agreement, and then there was a little release of liability in there. It's all on a paper trail, neat and tidy. And, at that point, it's a little tougher for the buyer to come along and say, well, I didn't know I could ask for these things, or, I didn't know what I could ask for, or anything like that. They can't have so many excuses. There's always non-disclosure issues, but when it comes to requesting the repairs, it's showing that they made these requests, the sellers responded, they agreed to that response and continued to move forward with the transaction and remove their contingencies. So once complete, the seller signs this section, sends this form for R along with the signed RR back to the buyer. So it works like counter offers. Page 2 is the reply, the buyer's reply to the seller's response. Page 1 is the seller, page 2 is the buyer, so it's the reverse of the original RR. Here, the buyer can indicate what he or she does or does not agree with the seller is willing to do in section 1 in the first page. If the buyer agrees to the seller's response in its entirety, he or she simply signs in this section. So if they're accepting, that's number 1 by default. All they're going to do is sign right here on their name. They don't need to check any other boxes. That's only if they're proposing something else. If the buyer has a slight modification to the seller's response, for example, changing the dollar amount of proposed credit or price, he or she should check box 2 right here and then type in what their modification would be. And then they'll sign it and send it back. If the buyer has made more than a slight modification to the seller's response and thereby rejecting the seller's response, he or she should check box 3, sign, and start again with a new request for repairs. So that'll be request for repairs number 2. So if it's just not going well, they want to regroup, try a new tactic maybe, check box 3, type in number 2 because it's going to be request for repairs number 2, and send it on over. So actually, sorry, they're going to withdraw number 1 and attach number 2 in the second section right here. So as it is on the request for repairs, if a C.A.R. contingency release is attached by the seller, such C.A.R. must be signed by the buyer along with this section and returned to the seller for the request process to be finalized and become binding. The seller has the obligation of either accepting or rejecting the buyer's modification. If the seller fails or refuses to sign this section accepting the buyer's modification, the process for finalizing the request for repairs is incomplete, and the seller is not bound by contract to complete those repairs. I had this one come up just like last week. since the RPA does not have specific section indicating who will pay for pest control inspection and who will prepare the report, how will that information be determined? And they did, while they were, many revisions back, the termite inspection used to be in the RPA. And they took that out a number of years ago. But it's still in here though. So the buyer has the right to conduct an inspection for wood destroying pests under paragraph 12 of the RPA and choose a provider to conduct the inspection and prepare the report. So this is 12C of the RPA itself. So it talks specifically about wood destroying pests and organisms. So to go beyond that, even when, it could be a foreclosure, it could be really any of these properties, the buyer has the right to investigate all aspects. They can send whatever inspectors they want out there to satisfy themselves to the condition of the home. So keep that in mind, even if someone's writing back in a counteroffer, this home's sold as is, we're not going to make any repairs and all this other stuff. That doesn't mean the buyer can't go and thoroughly investigate the property with a roofer and a plumber, an electrician, and a home inspector, and all these things to make sure that this is a home they want to buy and to figure out what the cost of everything is going to be to bring it up to their standard. Additionally, paragraphs 3Q, 16, 17 of the RPA can be used if the buyer wants to ask the seller to pay for the inspection. So this is where I usually put it here. I would type in, usually I just type in WDO, but you can put in, wood destroying organism, pest control, whatever, fees or costs, and you would check the box of who's paying for it. You could type in section 1 clearance right here. So that would be section 1 clearance, fees or costs, buyer or seller to pay. So this is you trying to, bind the seller up front to make, to provide a section 1 clearance. The sellers can be hesitant to sign that because if they haven't had a termite inspection done yet, they have no idea what the cost might be. It might come back with something crazy. I've seen them for $30,000, $40,000 sometimes. Usually I see them in the hundreds or thousands, but I've seen some pretty crazy ones come back where whole sides of houses were rotted out and all kinds of stuff. So, and that was generally on older homes with years and decades of deferred maintenance. But that's tricky for a seller to agree up front unless you're putting some sort of fee cap on it. I think we have time for a little bit of FAQs. So should all pest control repair requests be requested through the RR form? I highly advise it. Negotiating the wood pest repairs through the RR form after a registered structural pest control report has been prepared is the preferred way of handling the issue by the C.A.R Standards Form Advisory Committee. If the client or the brokerage wants to use the offer to purchase to negotiate these repairs, it's advisable to work with an attorney to draft appropriate language. So you can put in here that you want it done. The RR is a good place. If it was nowhere on the contract whatsoever, then just use the RR form to try and negotiate that while you're in escrow. What is the advantage of using the RR form to request wood destroying repairs during escrow instead of asking for pest repair work in the offer to purchase? Previously, it was common to request that the seller pay for section 1 and or section 2 pest repair work. Sometimes the seller agreed only to find out later that the cost was exorbitant. Like I was saying, they're agreeing to something up front that they have no idea what the cost is, or at least much more than anticipated. In such cases, there is often increased tension and animosity between the parties and their respective agents. The new protocol of making the pest repair request using the RR form allows the seller to assess the cost of such repairs before agreeing to them. So that's why nowadays we don't really see it a whole lot in the offer, or why that gets countered out. pretty often by the listing agent is because you're obligating your seller to a cost that nobody knows what it is yet. If they have not had one performed recently, a wood pest inspection. Practice tip, if the seller is agreeing to pay for either a section 1 and or 2 control clearance, the listing agent should attach the seller's response, the form C.A.R. with the box 2C1 checked, to remove all remaining buyer investigation contingencies, therefore including contingencies for wood destroying pests. So that this right here would be the contingency release form. You're going to be 2C1 entire buyer's investigation. Because you can see, you can release, you can kind of chip away at the investigations contingency. There's many little points in there that you can kind of chip away at. The contingency for obtaining fire or flood insurance. You know, there's HOA stuff. There's all kinds of stuff in there that you're kind of chipping away at. So I usually just try and get them to release the entire thing at that point. Can a buyer use form RR to ask for credits in lieu of repairs? Yes, we just went over that. You definitely can. Some agents really prefer that. I do. I like it. I like to get the credit, because what has come up in the past for me is sometimes the sellers, you know, they're on their way out of this house. They don't want to spend any more money on it than they don't have to. So they tend to hire the least expensive option or try and repair those repair requests themselves somehow. There's no obligation for the seller to have to use a licensed anybody to make those repairs. It just needs to be in a good workmanship fashion. So I've had buyers disgruntled with how the job turned out because the seller doesn't really care that much anymore. They're on their way out. And so sometimes negotiating the credit is a good option because then the buyer can use those funds to hire the person that they want, or if they want to do it themselves or whatever, but they can do it in a fashion that they want it, that is of their standard. So that's why I do like to just go straight for the credit. Some buyers really get nervous with that though, and they want all those items fixed. You always want to support your supporting documentation. A question I had the other day come up was, well, how do I determine how much credit to ask for? And the answer for that is if you had bids done, and that can be a smart thing, use the home inspection as your first line of, you know, seeing how of property condition and going, oh wow, it looks like there's a lot of electrical issues on here. How much is that going to cost? Well, I'm going to send a licensed electrician out there to give us a bid on it. And now you have a dollar amount from a licensed company of how much those repairs are actually going to cost. And if you get multiples of those, then that's how you can determine an amount for your credit to ask for. Doesn't mean the seller is going to go for it at all, but you know, at least then the buyer can rationalize the amount that they're wanting to ask for. They might have wanted to ask for a whole lot more because they thought that that was going to be a much more expensive fix than it was. So it can work in both favors, really. It can help them either negotiate more credit or kind of bring their expectations down of what things actually cost. What if the buyer's lender does not allow the credit? That's a real thing that can happen, especially if they're already getting a large credit and you have a cap on how much you can receive in credit per the lender. So when the lender's conditions, then the lender's conditions must be respected. Under paragraph 5E of the RPA, any credit disallowed by the lenders will not be paid. So that doesn't mean, you know, outside of escrow, check at closing, stuff like that. It would be a violation. to receive more credit than what was allowed by the lender. And there should be no attempt to arrange for credit to be made outside of escrow after the lender disapproves a credit. The simple solution, of course, for the buyer's agent to talk to the lender in advance to find out what the maximum credit is. So you're going through all of these, maybe these bids are starting to stack up a little bit. Just call the lender and say, hey, what's my cap here? What amount can I go up to for this credit that we're going to ask for? And that way the lender can provide you the factual information, hopefully, and you can act accordingly from there. Can a buyer use Form RR to ask for a price reduction in lieu of credit repairs? Yes, there's a section for that. Should the seller's response on the top portion of the 4R include a demand that the buyer remove contingencies? I say yes. Although it's not required, it is something that the seller would most likely want to ask for. One of the advantages of the 4R form is that it permits the parties to negotiate a simultaneous agreement for the seller to make repairs and for the buyer to remove contingencies. So the seller is not obligated to make those repairs until the buyer releases those contingencies stated in that C.A.R form. So it's a simultaneous agreement, which I think is pretty cool, actually. Let's see. A couple more, probably have a couple minutes left. If the buyer removes contingencies prior to the seller making the repairs, wouldn't the buyer be giving up cancellation right should the seller fail to make repairs? This comes up quite often as a question as well, and the answer is no. Once the seller agrees in writing to make repairs, paragraph 15 of the RPA requires the seller to complete the repairs prior to the final verification of condition, which is defaulted to 5 days in the RPA. And requires, among other things, that the repairs will be made in a good and skillful manner and comply with applicable law, including governmental permit, inspection, and approval if required. So, yes, they don't have to. I've seen some sellers, they're like, well, I don't want to start repairs until all contingencies are released. Well, if they didn't put that in their C.R form, then they need to start making these repairs to meet the deadline of prior to final verification of condition, which is, like I said, default 5 days prior to close of escrow. That's when you can do your walkthrough, is no sooner than 5 days prior to the close of escrow. And that's when you're going to verify that the work was done and done in a good and skillful manner according to the RPA. So this is an obligation of the contract and is not waived by the buyer's removal of contingencies. So yeah, at final verification or walkthrough, the buyer has the right to verify that the repairs have been completed as agreed. If not, such failure may possibly constitute a material breach of contract, entitling the buyer to cancel. So keep that in mind. If the buyer wants to continue on, they should note those repairs that were not corrected in the VP. And, you know, the risk with that is potentially they're going to have to take the seller to like small claims court or something like that, depending on the amount of the repairs post-closing. But at least they can get into the house and start moving in and things like that, and then deal with that afterwards post-closing. Now you got loose ends to deal with, though, even though it is between the buyer and the seller at that point. But hopefully they don't try and loop you in with that as a real estate agent. Can the simultaneous agreement for the seller to make repairs and for the buyer to remove contingencies be negotiated before the end of the buyer's 17-day inspection period? Yes, it can. There's nothing in the RPA preventing the party from agreeing to this at any time, even before the end of the 17-day inspection period, or whatever day you put in there to make that timeline adjustment. It is important that the buyer should have received all disclosures and conducted all inspections prior to releasing contingencies. So don't jump the gun. Make sure that everything, they're satisfied with their insurance and everything else before they release all their contingencies on all their investigations contingencies. I'm a buyer's agent and have presented the seller with a request for repairs, but the seller hasn't responded to it at all. Isn't the seller required to provide some sort of response? We touched on that earlier. Absolutely not. There is no legal or contractual obligation requiring any response. However, it does require the buyer to continue to perform. So like I said, at that point, they need to decide on if they're going to cancel and move on to another property and retain their earnest money deposit, or if they're just going to buy the house anyways in its condition. And this is 14B2 where it states that. I'm a buyer's agent, presented the seller with a request for repairs. Seller has responded not using the 4R form, but with just an addendum form. Is that the correct procedure? There is no one way to negotiate the repairs. However, these two forms, the RR and the 4R forms, provide clarity and structure that allows agents and principals to negotiate without having to draft all the surrounding language. The least amount of language we can draft ourselves, the better, because we're not attorneys. If you have an attorney doing it, that's one thing, but our contracts and disclosures and everything, they're written by attorneys, so it's good to use their jargon as much as possible. Ideally, if there's insufficient space on the top of the 4R form, then the seller can still use that form, but write in under item 1D, see attached addendum. When must seller complete the repairs? 5 days prior to that close of escrow per paragraph 16 of the RPA. Says it right there. And that's something that, if the listing side is giving you a hassle on this, point them to section 16 of the contract and let them know that they are not performing on their end. And I think this is the final one, and it's a real common misconception. Does submitting a request for repairs automatically extend the contingency removal period? Absolutely not. It is still in effect. Buyer is still obligated to perform on that particular timeline, whatever it is. And just because the seller is not responding or responding slow does not mean that the extended, the contingency period is getting extended accordingly. To emphasize the point that the buyer does not have an extension on the contingency removal, the seller may send a notice to perform, and they'd be totally within their right to send you a notice to perform to remove your contingency, your investigations contingency, per the original terms of the RPA, if you're past that timeline and they have not responded to the 4R, or the request for repairs. So if a seller is silent on the RR, but sends the notice of buyer to perform for removal of contingencies, a buyer's agent should confirm with the listing agent the seller's intent not to respond to the RR, and then advise the buyer accordingly. In effect, the buyer will have 2 days from receipt of the notice of buyer to perform to remove contingencies, to remain in contract, foregoing any repairs, or they can cancel the contract using the cancellation form CC. And they'd be exercising their physical inspection contingency at that point. In absence of timely response by the buyer, the seller will gain unilateral right to cancel the contract under the RPA. So they're not responding to the RR. Timeline is coming up for the investigations contingency release. Seller can send the notice to perform. If the buyer does not release a contingency, the seller can cancel. In that event, they are obligated per the purchase agreement to return the buyer's earnest money. And then the homes goes back on the market, basically. So that's the end of what I have. So if you have any questions on any of that, always give me a call. Wanted to go through, a lot of parts of the RR process where I get a lot of questions and agents hit snags and things like that. But hopefully it's provided a little bit of clarity when you're going through, and knowing how this process works helps you maintain leverage the entire time, and it keeps your buyer's earnest money safe. And on the listing side as well, making sure that the buyer is performing this whole time and what the seller's obligations are when the buyer is making these requests, and which you can see unless it's agreed to up front, they have no obligations really. So hopefully that provides some clarity, helped you out. And if you have any questions, I'm always around. We'll post the replay up in the back office, YouTube channel, and also in the Rise Realty Facebook group. So hope everybody has a great week, and we'll talk to you soon.